Yo, welcome back to MTVTA, guys. I'm your guys' host, Trent Manager. For all my returning patrons, of course, welcome back. All my new viewers and new patrons, welcome. Glad to have you guys here as well. So it is Sunday today, guys. We got another pretty red day. We kind of slipped even further than we did yesterday or over the coming weekend. It's been a tough weekend. But first, we're going to hop into our fear and greed index and kind of just go over how we're feeling. We got a 14 fear for now, 12 from yesterday, 20 from last week. Our whole week fear and greed index has been relatively low. We saw a low of 11, and it overall has been very, very fearful and just lots going on. We got lots of bad news, still bullish news going on, but it's crazy how the news, only really reports the bad. We've only had bad news, in this space. If on the main media, of course, if you were looking for bullish news, there is bullish news, just because there's always a yin to yang every day. But first off, guys, I wanted to this isn't going to be a super long video today, guys. This isn't going to be anything crazy. We will still be meeting Tuesday and Thursday, but I wanted to hop in today and kind of make an not emergency video, but kind of just give some breakdown because we did slide a little bit lower today, just to kind of see and reevaluate from our last video on Saturday. So we're gonna hop into Lark's tweet. I like Lark. He's another crypto YouTuber who does great work. Been following him for a long time, and he said Amazon is too volatile, must be a bad investment, or is it a fundamentally strong company which should have been accumulated on the dips? This is from the 20th, so it's a bit of an old tweet, but still holds very big relevance. So Amazon dropped 95%, and these are monthly sticks, by the way, guys. So please remember, each stick is a month. So people lost 95% of their valuation in their stock with Amazon. Buying, back in 1999, so till 2001, you were down 95% of your investments. And then you had another stretch from 2004 to 2007 where you had a 57% loss again of your investment. And then as you can see, where we continue to trend higher, but you can see the corrections along the way that Amazon had as well. I've kind of gone on the comments. People kind of got snarky, and people are like, you're comparing the computer programming to the best performing asset or best performing company in the world that is now Amazon. But at the beginning, I don't know if you guys remember how much trash Amazon got. People didn't think Amazon was going to be all that. No one ever thought that. So kind of just some food for thought there. And also, running over to gold has also had some extended times of market cycle volatility, downtrend, 41%, 66. Gold's been a store of value for thousands of years. It still has turbulence. It's the name of the game. So the reason I bring these up is not to throw salt in the wound, but just to show you guys that it's completely normal for assets to have very downward action and have those actions spread out for quite a while. We've been on this channel and we've never been over enthusiastic about throwing out crazy price targets and things along those lines, because we're not that channel. We're long term here. We're not here to make quick buck and do things quickly. This is definitely a longer process, and that's usually going to work out the best for you, especially when you hold assets, not only just Amazon and gold, but usually assets in general. You're going to be in better shape holding longer. So we're also going to go through real quick, kind of just go through the chart and kind of just see how we're looking. I kind of already did some drawings here from earlier, but just to touch on these that I did. So what we're looking at here is the Bitcoin to US dollar, and all of these sticks are monthly charts, so that's why it looks a little bit different today. Each stick represents a month. So first off, let's just kind of get this out of the room. We had this is from April time as well. So we had 1, 2. Okay, let's actually not start from April. Let's start from July. 1, 2, 3, 4, 5, 6, 7. So we had almost pretty much 7 monthly candle closes in a row. So Bitcoin is, I think if I remember right, it's 10x'd over the past 15 months. That's pretty ridiculous. That's absolutely insane. So definitely where I'm coming with that before I really, get into, the best case scenario and the worst case scenario is that, try to give BTC some slack. We have been, and we've talked about this on the channel too. We've been here, for people who've been here a while, we've talked about this, and you can go back in other videos and watch that. We've been overextended for quite a while. And this has been something that, of course, no one had in their arsenal, that they think that this was going to be the outcome in this swift. But we did approach caution, around our not even our blow off top phase. I can't even say that, but towards our overexertion phase. There, we were very, very overextended. But getting back to where we are now is that red case is the worst case scenario we had, and let me kind of break things down a little bit further. So dropping down to where we did on this wick, about $29,000 we touched. So if we are to close weekly below our $29,000, if we close our weekly candle close then I could probably see us having some more hurt. So us definitely retesting this 200-week EMA line. So that would probably put us about 25,000 per BTC to 20K BTC. That being said, the last time that we touched the exponential moving average, and for those who do not know what the exponential moving average is, it is the technical chart indicator. Now I pull up the Google definition just for no hazy intentions. That tracks the price of an investment like stock or commodity over time. The EMA is a type of weighting moving average, that gives more weighted of importance for recent data. So it just kind of gives that average as to, how the commodity or asset has been moving. So going back, if we were to go retest our 200-day moving average, which the last time we officially crossed was May time of last year, so well over 12 months ago, that would put us back to where we were, giving us a pretty much clean slate. So people are like, oh, well, okay, how does this differ from a bear market? How does this differ us from 2 or 4 more years of, us chopping sideways? Well, there's a couple reasons that it definitely deters us from that. So the reason that we just fell really so hard, ultimately, the main reason, if I pull up the 4-hour or the daily or the weekly, we'll be able to see it more clear. But we didn't make support levels throughout all this. Let me get my drawing out. So if you... These periods, this 1, 2, 3, 4, this 5-month period to where we went up, we didn't establish, proper support. Sorry guys for the bad drawings, for any of these levels. If we're really gonna break these down, we blew past these like blowing through drywall. Like, boom, wall 1, boom, wall 2, boom, wall 3, boom, wall 4. We blew through these. We killed them, and that's why ultimately, we're seeing this now. So, with that being said, let's go over our best case scenario now. Let's review to the green path and kind of see what we have in store there. So we could chop sideways, and I'm going to give even some more depth in this. And let me clear this up before we get started. This is not going to be a V-shaped recovery, guys. This is not going to be a, boom, then we're right back to it. No, this is going to be we've got to flip a lot of support now as resistance, because of how fast we've fallen and how quickly we have, through all this. This is going to be a slow upward trend, and it may not be fun, but you guys, it should be fun for you guys, because I'm really excited, because this kind of gives me a chance to basically start from March. So, I've noticed in my analytics and too, like, a lot of you guys are, relatively new, and that's fine. I'm glad you guys are here, and I'm glad you guys are taking this seriously, and you guys are still here, because there are going to be a lot of people who get shaken out through this. This is not going to be a easy ride back to where we were. And just like we talked about also, guys, like this is what we talked about with the lengthening cycle theory, how we've had diminishing returns, throughout the years of, the halving and, these bull cycles, that it's okay to take longer to where we are. Because if we really think about it, like, let's put it in like a cup and handle version, like, I think the longer that it takes us to ultimately tread, upward, like the longer it takes us to ultimately tread upward, it kind of just acts like a slingshot, like why? So like if we took a slingshot and we flung it back, with the rubber band, and we only did it like halfway, and then we let it go, our rock wouldn't, go as far. But, let's say we take it, we pull it back halfway, and, the correction like we have right now is, like that halfway slingshot action like I just did. So halfway back, and then let's say we stop, right? And we hold it, but then we kind of, like I'm about to do, we slowly just peel it back, and eventually we're going to get back to full power. But it's that halfway kind of just reset, because obviously your thumbs are going to get tired. I'm sorry, I make like all these really people tell me I make all these analogies, but I like them, because we slowly pull it back, we stop, take a reset because our thumbs are tired, and then we fully get our power, and then boom, then we let go. It's not always about getting off quick and getting it off effective. Sometimes it's about just getting it off right, and I honestly think that's what we have in store. So there's gonna be a lot of news. People are gonna wander off. People aren't gonna be here. There's gonna be a lot of people who give up on this, and they're not gonna come back, and that's okay. And that's okay. And that doesn't mean you're not built for it. And maybe you can come back some other time, when things are okay. But ultimately, there will be a time where what we just saw during the past couple months will happen again. And I'm just being realistic. I know this is not the video I wanted to make. Trust me, this is something that caught us all by surprise. But we're gonna have to feel this out the next couple days. Especially this week. This is going to be a big week. We're going to feel this out this week, see what has in store, and ultimately, I'm not in a bad mood, not upset or, mad about, what has happened. This is just a brighter opportunity, and I think that our lengthening cycles theory will stand true, like I believed in, pretty much this entire cycle. I think that was something that was true. We've talked about it so much, and throughout our entire time here. And, you know, I really advise you guys to stick around, you know, to not let up on your research and your teachings and so off, because there's still bullish news, and we're going to cover a lot on Tuesday. You know, this video was more for, you know, the best case scenario and the worst case scenario, and kind of just give a real life perspective as to, you know, someone who's giving you real life experience. That's really it. I've been through this. I have already been through this, and you can kind of just see by the tone and like how I'm, you know, maneuvering this. I'm not really shaking too much, you know. This isn't something that is new, you know, in my life at least. So, you know, proud of you guys. You guys are doing great. If you've made it this far and you are still learning and still eager to learn, you're ultimately going to be rewarded, you know. It's really just truly part of the game. And so that being said, guys, I will see you guys on Tuesday. Anything you guys need, shoot messages, like, subscribe, share this with anybody, friends or family. But ultimately, guys, it's going to be a hard battle. It's going to be a hard fight back up to the top. But, you know, I think we're right on schedule. I just, you know, there's a lot of things we're going to cover Tuesday, but even just over the weekend that we covered, guys, you know, we saw all the good news that was happening. You know, the roadmaps for Ethereum, and you know, Uniswap, and, you know, so many great roadmaps are still in play. Cardano, even, you know, there are so many great roadmaps still that have not even been executed. You know, for people to, you know, really call it quits just yet. You know, it's just too hard. There's just too much good news that wasn't even fulfilled yet. So, you know, do your best, guys. You know, keep your emotions in check. Go outside. You know, really enjoy stuff that you love, because this will still be here when you get back. And I believe we will be back, you know, full steam ahead, you know, coming weeks to months to come here. You know, I'm just giving you that long perspective just because it's hard to do this short-term stuff. And we're a long-term channel. We always have been. We've never been short-term like that. So, alrighty, guys. Thanks so much. Appreciate it. Have a great week and weekend, the rest of your weekend this Sunday. I will see you guys on Tuesday.